Hi friends, welcome back to Stockwood channel where we discuss investing strategies with facts. So friends, in today's video, we are going to discuss one of the major parameters that investors, particularly who are invested in banking stock or interested to invest in banking stocks, should be aware of. That is NPA. So without further delay, let's look into some of the topics that we are going to cover in today's video. The first topic we are going to discuss will be about what is an NPA and the types of NPA. And then we are discussing about provisioning, difference between gross NPA and net NPA, and where to check these particular things in a financial statement of the bank with some examples. So without further delay, let's get started with this video. So the full form of NPA is non-performing asset. So an asset is particularly anything that creates wealth for a particular entity or an individual. Right? When you say a non-performing asset, the particular asset has ceased to perform or give any value to the particular entity or a person. To further look into what an NPA as per the RBI definition, it is the credit in respect to which the interest or installment of principal has remained past due for a specific period of time. So that is when a bank lends a particular loan amount to an individual or an enterprise, if they do not pay the particular amount back to the bank, then that may be the interest or the installment of the principal for a particular period of time, then the bank has to consider that particular loan or an asset as non-performing. So if you see what is the specific period of time after which it is declared as non-performing asset, it is usually 90 days. All right. So further, before we go into this video, a humble request from my side to like this video and subscribe to this channel. It means a lot to me. Further, based on the time it is unrecoverable from the entity, it is further classified as a substandard asset if the entity doesn't pay the principal or the interest to the bank for less than or equal to 12 months. It is classified as a doubtful asset if it is not recoverable for more than 12 months. And it is declared as a loss asset when the bank decides it is unrecoverable. But anyhow, there might be some recoverable value left in the particular asset, which we are not going to dwell in this particular video. Moving further, let us see what an NPA provisioning means. This is particularly the amount that the bank has to set aside from its profits or income in a particular quarter after declaring a particular asset as non-performing assets. And what does the bank achieve by having this provisioning? So by having this provisioning, the bank achieves a healthy balance sheet, and also the cash flows will look healthier, and it will help further grow the bank business. And also this is a recommendation, and which is strictly guided by RBI regulation. So all the banks, whenever they declare an NPA, has to set aside some of the amount from their profit for provisioning. Further provisioning depends based on the type of NPAs as well. So another key ratio that an investor invested in a banking stock has to look out for is the provisioning ratio. It is basically the amount that the bank has provisioned by the gross NPA. We'll look further what a gross NPA is, but this is formula to calculate the provisioning ratio. Ideally, RBI recommends the banks to have the provisioning ratio at around 70%, but the higher the PCR ratio is, it is good for the bank. Now let's look into the difference between a gross NPA and net NPA. So gross NPA is the total amount the bank has failed to recover from its borrowers, while the net NPA is the net default loan minus the provisioning that the bank has done for the particular asset. Also, the bank declares a particular asset as gross NPA after it is unable to recover the principal or interest for more than 90 days, while the bank classifies it as a net NPA immediately the default happens. The effects of gross NPA, net NPA is the gross NPA actually harms the market image of the institution and also the equity value. So whenever the gross NPA of a particular bank increases, you will see the share prices of a particular bank falling drastically. While the net NPA will affect the liquidity and the profitability of the company or the bank. Now let's see some of the examples and where to look into for the net NPA, gross NPA and the provisioning. So this is a balance sheet of one of a prominent bank where you can clearly see here that the gross NPA this particular bank is around 4,400 to 4,600 crores. Right, because of the gross NPA, the bank has set aside some of its profit in terms of provisioning, and because of that, the net NPA has reduced. So always the gross NPA will be higher than the net NPA. And here in this particular quarter, you can clearly see as the bank has set aside a huge amount of 1,878 crores as provisioning, the net profit of the bank has fallen drastically and moved to the negative range. Yet another example is of another bank where you can see here the gross NPA is around 97,000 crores to 104,000 crores. Similarly, here also the bank has set aside a huge amount for provisioning. As a result, the net NPA is getting reduced. Now let us see some of the worst banks and the best 5 banks in terms of NPAs. Right? If you see in the worst 5 in terms of gross NPA, IDBI Bank is around 28.7% of its total asset classified as gross NPA, while as HDFC is the best of all the banks with a gross NPA of just 1.4%. Similarly, in terms of net NPA, the erstwhile Lakshmi Vilas Bank has a net NPA of 9.8%, while even in terms of net NPA, the HDFC Bank has a very low net NPA of 0.5. So friends, this is not a stock recommendation. This is given only as an example to give the investors an idea of how the NPA will affect the profitability and the revenue growth of the particular bank. Hope you like this video. In the future, I'll come up with more such videos so that investors are in a better position to invest in banking stocks. Please like this video and subscribe to my channel. I will see you in the next video. Thank you.